we're talking tonight about how a Harris or Trump win will affect the markets. Well, first of all, what's up with that subtitle there? Dr. Doom? What's that about, Julian?
You were there. You know the story. You know the backstory. When I used to talk about inflation, people were saying that I just talk about doom and gloom on the market. But it's not about doom and gloom. It's just about what the data is saying. The data is saying that
Mm,
we're going to see rocky seas. Then that's what it is. I'm not here to sell a dream. So yeah, I mean, you remember what happened online? There's a whole crowd that label me as doom and gloom, so I kind of just took it on, and it's a half joke.
okay,
Yeah.
okay. Well, I hope that's not what we're talking about tonight. What does it look like for, give us both scenarios. So if Trump wins, what does this mean for the market? I think we have a delay.
Well, a Trump victory would mean that would mean a couple of things. It's quite loaded. So it would mean a lot of tariffs, and it would mean a far more aggressive stance in terms of geopolitics. As we know, many of the US's enemies are actually the aggressors now. So, for instance, there's Iran, there's Russia, there's China. BRICS has gained a lot of momentum. So many of the opponents to the US, politically speaking, geopolitically speaking, have gained a lot of ground in the last couple of years because um, President Biden has not taken a strong position in terms of geopolitics relative to other presidents like Bush, for argument's sake. So, to give background, we could see an about turn where that is concerned as it relates to Trump. So, I'm expecting the US to either begin armed conflict with some of these states or enter proxy battles or come close to that. So, there should be a lot more tension where that is concerned. Also, beyond that, you're talking about tariffs because tariffs go back into the whole geopolitical argument because tariffs are really a form of weaponization. It's about weaponizing resources. And there's a big push to drive manufacturing onshore in the US. But what will also happen is that in replacing cheap manufacturing in China, we could have a lot more cheap manufacturing taking place in Mexico because of NAFTA, the North American Free Trade Agreement. So we could see Mexico booming as it relates to the country being a free trade partner with the US more so than today. So that would benefit Mexico's economy significantly. Um, Also, we can expect a far more aggressive push as it relates to capitalism in general, specifically libertarian policies. So policies that are more that are friendly to politics, friendly to the billionaires and economic elite, and not as much to the middle class. Wait, hold on, just a second.
Yeah, the dogs are out tonight, and we just had Orville commenting that the M16 them quiet tonight, but because the weather upon them, but it's something troubling them just now. They calm down a little bit. So, Julian, so you're pointing out, all right, markets typically react well to Republicans, conservatives, and also to a potential Trump presidency. But you also mentioned the Trump tariff, that 30% import duty that he is proposing to impose on imports from certain countries, which would raise prices and could have an inflationary effect. So, what are the markets? How are they feeling about that proposed Trump tariff?
Well, I don't think the market is looking at it from an inflationary lens, but more so from an earning standpoint. So, how does big pharma and big oil and the big banks, how do those lobby groups or economic blocs benefit from Trump policies? And the net benefit should be, well, again, we have to consider both sides of the coin. So there will, in fact, be a significant inflationary impact from those tariffs. But along with that, because Trump is known to be more business friendly, especially within the context of taxes, um, labor relations, etc., he tends to rule in favor of these large corporations. And from that standpoint, it is seen as something that is more likely to drive earnings performance and to be more investor friendly than a regime that might be under Harris, because Harris has spoken about increasing capital gains tax, for argument's sake, which is not good for US investors. And we all know that the Democratic Party has been more conscious as it relates to labor relations, having fair wages, etc., which hurts the bottom line of many of these large corporations. So, in summary, Trump is seen as having a policy package that is more business friendly and that is always going to drive the market. And it's really about earnings and what is the net effect. So, it's not inflation or earnings, it is earnings net of inflation. But more importantly, I think that the next decade, from a political standpoint, is going to be very different than the previous decade, because what we're seeing is a regime change. Um, so, for example, the way people vote, the reason people vote, the attitude towards immigrants, a lot of that is evolving, for argument's sake. And also, there's a huge debate about BRICS and where BRICS fits into the whole geopolitical discussion. There's one camp that says that BRICS is not a threat, and BRICS cannot threaten the the US dollar. Let's put it in simple terms. But I don't think the intention is really to eradicate the use of the US dollar. I think BRICS is really there to not necessarily stop other countries from using the US dollar, but more so to prove a point politically and to reduce the leverage that the US has through its big stick policy. Because, all right, so back in the day, the US used to have the gold standard, so the US dollar was tied to gold. And in removing the gold standard, what the US would rely on is international trade and also its war machine. So if it's a case where the US cannot leverage its advantages over another country strictly through trade, they can always use soft or hard security-based policies to twist that country's arm. For example, Venezuela and Cuba is another example, and countries that side with those other countries. So, for example, if a country is too friendly to Cuba or Venezuela, then the US would clamp down on them from a trade standpoint. So, again, geopolitics, the war machine, and trade all go together. They're not separate. And I'm just thinking that we're going to see far more tension now because it's been the first in a long time that so many of the US's enemies have gained so much momentum. I'm surprised that Ukraine hasn't fallen like full on, because I anticipate use Ukraine to bait the NATO states into armed conflict as a means of getting the US to relax their stance of being neutral or being aloof to the issues and to send troops on the ground, because Putin is the type of leader that wants a war. There are some political leaders that want to go down in history as warlords. Saddam Hussein was one of them. Putin is one of them. There are several others. Bush was one of them. There are some leaders who want to go down as war heroes. You can think of them. Not really hero in the true sense of the word, but they're warlords. That they want that to be their legacy. So the fact that there are so many of those kind of leaders now, we're likely to see more extreme policies overall. So it's deeper than just saying, okay, there are going to be some tariffs, because we also have to consider that we're running out of cheap oil, which is why so many US companies have gone into Guyana. because again, as we shared previously on other episodes of Taking Stock, the further we have to drill for oil is the more expensive it gets. And
Right.
oil is not a infinite resource, it's finite.
Sean wants to know if World War III is still on as per your prediction.
Well, I don't know if I can be credited as Team World War Three, but because World War Three implies that there'd be a very large coordinate. Yeah, that's funny about the Doctor Doom thing. See, it played right into it. Anyway, um, the World War Three implies that there's this large coordinated effort to go into a political tug of war. That might not necessarily happen, but what we can expect as a baseline expectation is that the period of peace that we've been accustomed to for most of the last 30 years, especially in the Western Hemisphere, is not likely to continue because we're going through a different political cycle. The
Mhm.
political cycle is now dealing with more extreme governments that are negotiating with each other, right? So we're likely to see a reduction of globalization or a different phase of globalization where we're starting to see the prominence of trading blocks over broad-based international trade where China is just producing for almost everybody pretty much. You're going to see China trading with key strategic partners and other goods producing countries doing the same thing. And beyond tariffs, just from the standpoint of having trading blocks and what they call less integrated supply chains, what that would do is cause longer shipping routes and cause ships to have to use more energy to move goods. And that is inflationary because we're not benefiting from economies of scale anymore. Countries can't just focus on what they're good at and use the world as their oyster. If we're focusing on trading blocks, it simply means that as it relates to inflation, even if there's no direct tariff on a good or a service, it means from a good supply standpoint and a logistic cost standpoint and an energy cost standpoint, we're likely to see higher prices for certain commodities. So I think this is a good opportunity for investors to lean into commodities, especially countries and companies that sell and produce commodities. I think the traditional means of just, for example, relying on cash or cash like instruments is not going to be as effective as it would have been 25 years ago. So, even though interest rates might go back up to match a higher inflation expectation, the fact that we're in a different regime as it relates to commodities because of what's going on politically, we have to change how we invest. So, for example, gold, metals, silver, silver producers, real estate, tangible products, um, you name it. As it relates to commodities, it's very good for us to find a way to get some commodity exposure to net out some of the risks that we're talking about. Because as it is now, even if it doesn't perfectly align with our discussion, it's not likely to be far off because there are some things that are just far down the wicket. In other words, if BRICS wasn't going to be a threat, they would not have gotten the momentum that they have today. That story would have been killed a long time ago. And there have been US military chiefs that have gone as far as saying we expect armed conflict with China in 2027. But the problem is that the US has had difficulty recruiting, meaning in all branches of the military. So what you find is that while China and other US opponents have been able to sustain their infrastructure as it relates to war and their military machine, um, the US, while they have very advanced technology and their defense spending in their budget is huge, and the US budget is another thing. America is their debt to equity is crazy. They're where we were in 2013. I think their debt to equity is more than 130%. America has borrowed too much in a short space of time. So even though they have the biggest defense budget to this day, it's not likely to be enough to fight all their enemies at the same time. It's just going to be too much at once. They have to cut back at some point, and they don't have the manpower.
So we have a few questions for you, Julian, before we wrap up. Sean wants to know, is there any advantage that Jamaica could take advantage of if Trump wins?
If Trump wins, it's very likely that many Jamaicans will come back home, and meaning from overseas. And if they do, they'll bring their contacts and their experience and their capital with them. And what that might do is one, make the job market more competitive, but it might increase labor productivity because it can reduce that huge gap that was originally created by brain drain and create what is called brain gain, meaning that there's an increase in the technical base of the labor force.
Are those the
So
Jamaicans that would be coming back home, though?
yeah,
Sounds shady.
some
You
of them
think
would
it's
have
the
been working
educated
for,
Jamaicans that will be coming back home?
yeah, for sure, that they'll be a part of the mix. And then those persons, they have a very huge multiplier effect because of how far $1 can stretch, much less tens of thousands of US dollars that you would have saved up. Because, for instance, there are many persons who are they're frustrated. Their careers have not played out the way they expected it to. Inflation in the US has been higher than they originally expected. There are many quote unquote successful Jamaicans overseas who want to come home because of aging parents, and they're tired of the US system. They grew up as conservative. American laws have been more and more liberal. They want to raise their children with traditional values. And these are not my views, by the way. I'm just saying what the narrative is. Um, and also, there's also the longing for home to begin with, and persons want to give back. So I'm not saying they'll all come back, but I expect a big shift because I've seen where persons have started to change their minds about quote unquote foreign. Once upon a time, running after foreign was a cheat code. I'm not hearing that anymore. And many persons saying, look, it's not it's not what it shaped up to be. But Trump might be that last straw to break the camel's back as it relates to persons coming back, and that can cause brain gain. So that might drive up labor productivity. That might be better for Jamaican businesses because per capita income may rise because you are now catering to a different demographic of persons. There are persons who have higher saving um, higher saving bases because of how well they've done overseas. And persons, again, they have their contacts overseas. There are more persons who might be starting businesses because they'll have the savings to actually start something for themselves, etc., 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 etc. Because what we're suffering from now is really, it's not a crisis, but it's a challenge related to human capital. We have a
Mm.
human capital issue.
You mentioned earlier investing in commodities being the way to go in the coming years. Nicholas wants to know, how do we get to invest in gold here?
Well, you could you could start a US investment account with a trading platform like Schwab or I'm trying to remember the name, but Interactive Brokers. Sorry, Interactive Brokers. I have Interactive Brokers, so you can use that as a Jamaican. You can open an Interactive Brokers account and you can invest in companies that sell gold, or what you can do is invest in an exchange traded fund that holds gold based assets. So it's a fund that is built by an investment company overseas and they charge a management fee. It's just a managed portfolio, but the theme of that portfolio is gold or whichever commodity you choose. but they're ETFs that are tied to different commodities. So those are two options. You can go direct or you can go indirect. Indirect, you buy some gold mining stocks. There are also persons who might be into options trading. That's a third avenue. But sometimes options trading has high minimum capital requirements, meaning that you might have to invest higher sums to be able to absorb the risk of trading options. And that might not be the best avenue for someone who is not experienced. Options trading can be very risky. So maybe the gold ETF would be one option. But I only gave gold as an example. I'm just saying that money being the US dollar in this conversation is likely to lose value at a faster rate in the next 10 years than it has in the last 10 years. That's the point I'm really making. And the only
Mm.
thing we can do about that is to buy hard assets, and hard assets include commodities, um, property and property linked investments, etc., etc., etc.
Mm. So finally, Julian, we never did touch on what a potential Harris victory could look like for the economy. She seems to be stacking her coins in the corner of building up small businesses. So what would that look like should we have a Democratic President Harris in the White House?
Well, that's good because from the standpoint of creating jobs, if there are if there are more small businesses that are able to pay fairer wages and still get by, then that's good from a labor standpoint. So it means that persons meaning persons who are working in the US, they would have a deeper labor market to operate in and they can self-actualize. So that's good from a standard of living standpoint. But as it relates to business overall, some of the policies she has put forward are not necessarily business friendly. For example, the capital gains tax. Many companies might not opt to list on the S&P 500. They might stick to private capital vehicles. So they might go with private equity funding or venture capital funding. And most investors don't have access to that. Most investors have access to the S&P 500. So that's one way there's a drawback. Also, there might be migration of capital because of unfriendly tax regimes. So what you might find is many of the large US companies might seek to domicile businesses outside of the US um, to a greater extent than they would have done already, because that happens already, but it might increase the prevalence of that um, and create a budgetary issue for the US. So you know, everything's a matter of pros and cons. But just from a probability standpoint, I'm expecting a Trump victory.
Okay, well, Julian is making his predictions. We'll see in a few hours. Maybe because it's so close, who knows? It could end up taking days, weeks, months, like it has in the past, especially because we're talking about Trump here. Um, hopefully, within a few hours, we will know what the result is. Thank you so much for joining us again, Julian.
Anytime, Khalida. Thanks for having me.
I'll leave it to